I'm Butch Bakani. I lead Principles for Sustainable Insurance at UNAP. I initiated the PSI in UNAP when I joined it in 2006, and we eventually launched it at the UN Conference on Sustainable Development in 2012. Can I just check a raise of hands of who's familiar with the PSI until now? So a few people. So I know Ed from HSBC. Who else? Samsung Life. You're a signatory and also Samsung. Okay. So the two branches of insurance for Samsung and HSBC are familiar. So good. So there's a reason for this briefing. And then let's make this engaging. So I'm going to do a pretty much comprehensive presentation on the evolution of the PSI, but you're free to interrupt me and ask questions, and because it's going to be quite expansive on what does sustainability mean in an insurance context. So first one is, what's the theory of change within the PSI? The theory of change is that if we're all after sustainable development, which is about economic, social, and environmental sustainability, what is the role of the insurance industry in driving sustainable development? So there might be a generation gap here, but who knows the movie Back to the Future? Some, okay, a bunch of people know. So that's one of the most popular sci-fi movies from the 80s. It's like a pop culture classic. And if you know the Back to the Future movie, what makes time travel possible for the DeLorean machine is the flux capacitor. And it looks like this triangle here. So the flux capacitor for sustainability and insurance is this triple role. The first agenda is the risk manager role of insurers. So the whole business is premised on managing risks. So understanding, preventing, and reducing risk is core to the insurance model before you actually share and transfer the risk to the insurance company. So all the analytics that insurers have done, be it on health or natural catastrophes, and all the prevention and risk reduction that happens on preventing disease or preventing floods are all important components of that risk manager role. The second theory, part of that theory of change is the insurer role. Now, most people would affiliate insurance with its financial shock absorbing role, and that is very instrumental to what insurance is to many people around the world. However, the PSI has also widened the scope of insurance to be like other forms of finance, be it credit or investment, where insurance also enables certain economic activities. And those activities could be sustainable or unsustainable. So it's not simply a financial shock absorber, it also has an enabling role, just like when you provide a loan or you invest in a company, it enables activities. And the third role is the role of an institutional investor. The global insurance industry has over $30 trillion in assets under management, and the way that capital is invested and deployed would have a telling impact, whether it goes to sustainable or unsustainable companies. That also is a big role. So the two sides of the balance sheet of an insurance company are very evident, the underwriting side and the asset side of the balance sheet. And we believe for a company to be a true sustainable insurer, you should be able to harness these three roles for sustainability. So, and this is why we created the Principles for Sustainable Insurance and launched them in 2012. And the PSI, as a set of sustainability principles for the insurance industry, this was not developed overnight. We actually went to 7 regions around the world. In Asia, we had the regional consultation in Tokyo in 2011. We also went to Oceania for the to complete the regional exercise aside from Europe and North America and Africa. But we ended up with four overarching principles. And if you look at those principles, the principles are based on the spheres of influence of an insurance company. Principle one is really about core business. How do you embed environmental, social, and governance issues, or to summarize ESG, sustainability issues, into everything that an insurance company does, from strategy to underwriting, claims management, all the way to investment management. And for investment, preceding the PSI in 2006 were the principles for responsible investment, which are already applicable to institutional investment, be it an insurance company, an insurer's investments, or pension funds and foundations who also are part of the institutional investment value chain. So we didn't have to recreate investment sustainability principles for investment management, and it simply shoehorns that into principle one of the PSI. Principle two is about the insurance industry value chain. If you are an insurance company, how are you engaging on these issues with your brokers, with your agents, with your reinsurers, etc., and your clients, obviously? Principle three is a recognition that even if the entire global insurance industry comes together on this issue, it won't be enough to drive systemic change. We need to be able to work together with governments, with financial and insurance regulators, and civil society on this agenda. And principle four is about accountability and transparency. PSI company signatories, just HSBC and Samsung, they have to have an annual disclosure on how they're implementing the principles. Without that, this will simply be a statement of good intentions, because there's no accountability and transparency on how you're implementing them if you simply sign on and don't disclose annually how you're implementing the principles. So I'm very happy that we are in Korea for this regional roundtable, because at the time the PSI was launched in 2012, we got endorsement all the way from the UN Secretary General, then Ban Ki-moon. And it's not every day that you can ask the Secretary General to endorse something for business, so much so finance then. But he and his office were very happy to support the agenda. We launched it at the UN Conference on Sustainable Development in Rio de Janeiro. It was called Rio Plus 20. Does anyone know why it's Rio Plus 20? Yes?
Rio conference. Eleonora from Italy, but I work here in Korea.
Wow, that's rare to be able to answer that question. So Rio Plus 20, because the original Earth Summit was in 1992 in Rio de Janeiro in Brazil. And what did that Earth Summit produce? The UN Framework Convention on Climate Change, the UN Convention on Biological Diversity, and then the other, what was the other one? There's something on forests as well. So these are the conventions that we're talking about right now. We're talking about the climate negotiations that's based on the UNFCCC, produced in 1992. The Kunming-Montreal Global Biodiversity Framework that was discussed earlier, that came from the UN Convention on Biological Diversity. So 20 years after, there was a moment of the UN gathering there, the world's leaders. And actually, Rio Plus 20 in 2012 led to the agenda of the UN Sustainable Development Goals, the SDGs, which were preceded by the Millennium Development Goals, or the MDGs, during the time of Kofi Annan. So, from a bunch of, literally, I was working with a dozen insurers in 2006. We now have 250 insurance and stakeholder organizations as part of the PSI. The dots there are already outdated because we lost count in terms of dotting maps there. But the green dots are really risk carriers, insurers and reinsurers and brokers. And the yellow dots are insurance associations, supporting institutions like insurance institutes, and some even regulators out there. So let's look at where we are right now. Look at Korea as a hub right now for PSI, alongside the initial leadership of the Japanese insurance industry. But we've expanded to China. We have HSBC Insurance here present, and we also have Australia and a few in Singapore in the Southeast Asia as well. So let 1,000 flowers bloom, and that's what the PSI did. So fast forward, there's many things that the PSI did in the first 10 years, but I'm just gonna fast forward to the PSI celebration of its 10th anniversary last year, not to look back at what we did in the first initial years, that these were the formative years of the PSI, but really, what can we do to drive sustainable insurance in this decade of action? And if we summarize this decade of action, there are three main goals for the UN. One is, if we want to avoid the worst impacts of climate change, we need to cut emissions in half. Otherwise, we won't make it to net zero by 2050, or it's going to be extremely difficult. Second is the nature agenda. We are nature negative right now. We need to reverse nature loss and make it nature positive in the same way that we're doing the net zero agenda on climate and emissions. And third is the UN SDGs, which is really quite encompassing in terms of the environmental, social, and economic agenda. But I just want to highlight one thing in the SDGs that's really central to that agenda. It's the core tenet of leaving no one behind. So that means development shouldn't only be for a limited few, but for all. So as we achieve prosperity, as we achieve environmental sustainability, you cannot simply leave people behind in that agenda. So there's an environmental agenda, there's a social agenda, and that is really alongside the economic agenda. That's the SDGs is pushing. So out of that agenda, what are the priorities of the PSI in this decade? Insurance as a lever for decarbonization. So that goes over and above this more fundamental and widely recognized role of insurance as a form of, as a tool to enhance financial resilience and to cope with the physical impacts of climate change, for example. So there's climate change mitigation emissions, there's climate change adaptation, there's the nature agenda that includes the pollution agenda. There's the whole ESG agenda on how you systematically integrate sustainability issues into non-life and life and health insurance business, because these are both insurance branches, but they're very different from each other. And even within PNC or non-life insurance, marine and non-marine are worlds apart in terms of underwriting and portfolios, life and obviously health, group, and personal lines, and all of that distinction. And then there's the agenda of how do we start looking at portfolio-wide metrics on how entire insurance underwriting portfolios are really oriented towards achieving the SDGs. It's not simply a metric on emissions, it's not simply a metric on resilience, it's not simply a metric on inclusion. It's all of those metrics that contribute to a sustainable insurance portfolio. And then roadmaps and strategies. There's many jurisdictions around the world which has a sustainable finance strategy, whether it's a region in Europe, the EU, or China. They have a stable finance strategy, or Norway or Australia. But if you look closely at those sustainable finance strategies and roadmaps, when people talk about finance, they actually talk about more investment and credit and lending and not really about insurance. And if it's insurance, most of the time, people talk about the asset side of the house or insurance as a financial shock absorber. So these strategies on, on insurance in sustainable finance roadmaps are very narrow, if at all, focusing on insurance. And then third, how do we influence the ecosystem, be it policymakers, insurance and financial regulators, and the real economy, which is at the heart of the transition. So let's start. So obviously, I ate a lot of time already with that, but um, let's start with the overall picture on climate. I think I don't need to stress it, but we're way off the mark on climate. We didn't need the IPCC AR6 report to remind us of of what we will encounter if we don't meet the 1.5 degree limit. It's not a target, it's a limit. Because in 2018, the IPCC already issued a special report on what happens with every half degree of warming. And the, the costs, be it on crop yields, sea level rise, extreme heat, is far worse in a 2-degree world compared to 1.5 degrees. So when we spoke with one of the main architects of the Paris Agreement, Christiana Figueres, she told us, because the Paris Agreement was forged in 2015, if we had known this science in 2015, the Paris Agreement would have been more ambitious, because it was super clear on science that every fraction of degree in warming means lives, livelihoods, and assets lost worldwide. So what has the PSI done? So TCFD is the Task Force on Climate-Related Financial Disclosures. It was instigated by the Financial Stability Board that looks really at climate change as a financial risk to financial institutions. And the theory of change of then chair of the Financial Stability Board and governor of the Bank of England, Mark Carney, was that climate change, there's a tragedy of the horizon because many financial institutions look at climate change from a 3 or 5 year window, but it really manifests itself fully over years and decades down the road. So financial markets are not capturing climate change risk and opportunity because climate change risk and opportunity is not being disclosed by actors in the real economy and not captured in insurance underwriting, not captured in investment, not captured in loan books. So the theory of change was that if companies in the real economy and financial institutions start disclosing climate change risks and opportunities, then climate change risk would be priced in financial markets, and then you'll get the real cost of climate change. So what did we do on insurance portfolios? We looked at the impact of climate change on insurance portfolios because TCFD challenged the thinking there of disclosure and climate change risk management by financial institutions. Disclosure is not new. It's been around for 20 or 30 years even. There's a CDP or the Carbon Disclosure Project, the Global Reporting Initiative, now the IASB. Disclosure is not a new agenda. What was new with the TCFD, it came with the mandate of the Financial Stability Board, and the toughest nut to crack in TCFD was to use forward-looking climate change scenarios 10, 20 years down the road, whether it's 5, 2 degrees, or 3 degrees, and see how it would impact an underwriting portfolio in the case of insurance companies. So physical risk, insurers are most adept at because natural catastrophe risk modeling has been around for ages, hazard, exposure, vulnerability. But even on the core competence of insurance companies, imputing latest climate science that projects 10, 20 years down the road, we found this exercise, the industry had to sharpen its axe on physical risk and climate change. Transition risk, as we move from a high carbon and to net zero economy, many insurers, even leading insurers and reinsurers in this exercise did not have a sophisticated view of how it will impact their underwriting portfolio. And on litigation risks, this is really about more litigation happening in the real economy. And if you are providing directors and officers liability or professional indemnity insurance, how much of that climate-related litigation will eventually end up to be insurance-related claims? So we're seeing more litigation happening there, but this is a black box for your insurers. If you're a big liability underwriter, you need to start looking at climate change, potential liabilities there. So what TCFD did was it highlighted, particularly from regulators and supervisors, why they should be looking at these issues for insurance companies, because they want to be sure that the insurers that they regulate and supervise are resilient to the impacts of climate change. However, it did not pose the question of how underwriting portfolios can reduce climate change by reducing emissions. It was more about how climate change is impacting insurance business and not the other way around. So the Net Zero Insurance Alliance was born. And here, the basic agenda was insurance underwriting portfolios as a lever for decarbonization. How can you do this in an insurance company? You can, as a company, you can make your individual decision to have a policy on fossil fuels, whether you underwrite them or not. You can engage with corporate or retail clients on their decarbonization pathways. You can ensure the transition, renewables, nature-based solutions. You can look at your claims management, whether you can repair instead of replace, build back greener, not just build back better, and reduce emissions there as well. This is in addition to a sister initiative called the Net Zero Asset Owner Alliance, which looks at how investment portfolios can decarbonize the real economy. And the theory of change here is very simple. If the real economy today is net zero, then finance is automatically net zero, be it lending, investment, or insurance. But the real economy is high carbon, so the theory of change is that how can insurance, lending, and investment influence the real economy so that it can drive down emissions in the real world? And in insurance, we did a white paper on, we created sustainable insurance at UNAP. We also created the concept of net zero insurance and also nature positive insurance, which I'll talk about later. So if you want to know what is net zero insurance all about, it was last year we created a paper on a white paper. It's the most authoritative paper on net zero insurance. And then some basic things that were missing, because investors and banks were looking at decarbonization far more ahead than insurance companies. Insurers are more adept at climate change adaptation and resilience compared to banks and investors, but on mitigation and decarbonization, banks and investors were far ahead. So what was lacking in insurance? There were no metrics to attribute emissions in the real economy to insurance contracts and portfolios. There were similar metrics for loan books and investment portfolios, but none for banks. So if you are insuring a company providing property cover, how much of that emissions of that company could be attributed to the insurance contract that you provide? There were no metrics like that before. And then once you have baseline metrics across lines of insurance, you can then set targets for your underwriting book on how you can show in every 2 years or 5 years a cycle showing the emissions of your underwriting portfolio and drive it down to net zero as we follow that path in the real economy. So the target setting protocol was launched at the World Economic Forum in Davos last January. And this is the partnership we had on insurance associated emissions. So now there's a formula. If you're providing commercial lines insurance or personal motor lines insurance, that's the formula to capture insurance associated emissions if you're writing those lines of business. There's nothing yet for life and health business, but there's some agenda towards that going forward. And then these are the sort of targets, targets for your entire portfolio. For particular sectors, you can engage with your clients, and you can also have all the good stuff of the green insurance transition. Um, there are no standard setters there on targets and finance. So at the moment, the Science-Based Targets Initiative is the de facto standard setter in the absence of standards set by financial regulators on net zero. Next part on climate change. This is from the IPCC AR6 report, synthesis report recently. And I'm showing this because I could really see my family in this image where my mom or my dad, myself, and my kids. And you can see here that no matter what the scenario is, the future is bleak for future generations, already as it stands right now. And this makes the net zero agenda and the resilience agenda even more important because we are literally destroying the future of our children and our children's children as we speak right now. And we need to reverse that trend. Otherwise, it's very hard for me to look at my daughters in the eye and say, like, what's the future has for you? So this one for me is very striking because it really shows how it will affect the actions that we take today will affect future generations. So what is the UN doing in this agenda? So obviously there's the whole mitigation agenda, but last year at COP27 in Egypt, there was a big win for developing countries because finally there will be an intergovernmental fund that will support developing countries like Pakistan and what happened last year. What will happen when there are losses and damages for many vulnerable countries who have the least emissions out there? So there will be a loss and damage fund. I was part of a visioning exercise in the UN earlier this year about that, but there's a whole process that will lead to COP28 in Dubai that will show who's going to pay for that fund, how will it be allocated for developing countries, and so on and so forth. In the PSI, what are we doing? We have the V20 Sustainable Insurance Facility. The V20 was originally 20 finance ministers from climate vulnerable countries, now expanded to 58 countries, and we're now hoping that we can create insurance solutions for MSMEs in developing countries. I'll touch on that in the next session. The African insurers are doing something for Africa. At the international level, there's a global shield against climate risk that's around, at the moment, $250 million of funding, largely from governments, including the German government, the Japanese government, the Danes, the Canadians, looking at how the international architecture could make public and private finance flow more to the most vulnerable. And then there's the loss and damage fund that I was talking about. Nature, and I have my colleague here, Romy, who leads our nature work at UNEP-FI. The Kunming-Montreal Global Biodiversity Framework that was forged in 2022, the High Seas Treaty earlier this year, and next year we will have a plastic pollution treaty. If you add those up, that is like the Paris Agreement agenda on climate change. And that will send policy signals across the world, and then real economy signals, and then financial market signals on taking into account nature. And nature story is sad, just like climate. It's really a decline in biodiversity over time. And if you're wondering why this is so important, if you really go down to the bottom of the environmental sustainability agenda, there's only two things that make life on this planet possible: a stable climate and a rich biodiversity of life. Without those two, nothing in this world exists. So this is why that's important. And so the agenda is, if it's net zero for climate, it's nature positive for nature. We need to reverse nature loss, and we need to have full recovery by 2050. So what has the PSI done over the years to support that? We're looking at how insurance activities can prevent damage to natural World Heritage sites, like the Okavango Delta in Africa, for example, or the Great Barrier Reef, anything that has natural significance. Illegal fishing in the high seas, one of the most rampant activities that's killing marine ecosystems in the ocean. And believe you me, there are somehow insurers, there are some vessels that are involved in illegal fishing that somehow get to procure insurance. So that literally has gone through the net. So insurance has actually enabled illegal fishing by providing insurance to illegal fishing vessels. Plastic pollution, hydropower. Hydropower is a big source of natural ecosystem degradation. And how can insurers be part of the agenda to reverse nature loss there? Korea has been a champion on environmental pollution. The Minamata Convention was forged here in Korea, but through the leadership of DB Insurance, we were able to work on its environmental pollution liability report, and then plastic pollution as well. So we had sustainable insurance as a concept that led to the PSI, net zero insurance, and nature positive insurance, first coined by UNEP. In the context, we work with the UN Convention on Biological Diversity, and this year, we will, just like on net zero insurance, we will produce a white paper on what nature positive insurance is all about. So I really like this chart because the upper part are the warming stripes from 1970 to 2018, and the lower half are the biodiversity loss stripes. And it simply shows you the story of our planet in the past, during the industrial age. There's a lot more emissions, and there's a lot more degradation of nature. And all of these is leading to planetary crisis that are impacting not just the environment, it's affecting all of us and future generations. And that's what we're trying to do. And then PSI, the wider ESG agenda that covers human rights, etc. We did a lot of the ESG guidance there over the years were for investors and banks. Until 2020, there was nothing for underwriting. So we did something for PNC and non-life, and it's now the go-to reference on what is ESG and underwriting. And last year, another breakthrough through the leadership of Ed from HSBC Insurance, there's now an ESG guide for life and health underwriting portfolios, which is a very different kettle of fish from non-life insurance. And Ed is going to talk about that later this afternoon. I'm not going to steal the thunder away from him. So look at life and health, and we are doing more things on life and health this year that will really push the thinking and agenda on how life and health insurers can be part of the solution set, not simply as institutional investors, but as underwriters. And then there's the insurance SDGs agenda, another concept that we've coined at the PSI on how insurance could actually lead to the achievement of the SDGs. The roadmaps that I was telling you about, we have sustainable insurance roadmaps in Costa Rica, Australia, Canada, California, and Africa as well. Look at the case of Africa. In a roundtable like this in 2021, we had something in Nairobi during COVID, pandemic period. But that Nairobi Declaration on Sustainable Insurance led to 100 African insurers launching the African Climate Risk Facility at COP27 last year in Egypt. That's supposed to provide $14 billion of cover for 1.4 billion Africans this decade. And that's an example of the PSI making its reach in regions and for regions driving their own agenda and writing their own story. Regulators. So we have Principle 3 in the PSI. We said we will work with governments and regulators. So in 2016, UNEP created a PSI for regulators. It was originally chaired by California, then Australia, then the UK. It's now chaired by the Insurance Commissioner of Singapore, Daniel Wang. And the basic agenda is how you integrate sustainability issues into insurance regulation and supervision, starting with climate change risk, but now they've also gone into nature. already. So it's not simply a market agenda, it's also a regulatory and supervisory agenda. And if you go back to our flux capacitor and our theory of change, that is what the PSI is doing and prioritizing in this decade of action. So I consume a lot of time, but hopefully you can get away from this session knowing much more about PSI beyond pounds per square inch, but more about the principles for sustainable insurance and what the priorities are. Any questions from anyone? Was that helpful? Was that easy? Any other question? What's next? What's next? These are the next things for the PSI. These are the priorities. So we're not going to have a different set of priorities next year. We're simply going to ramp this and scale it up this decade because we have 7 years left. And if we don't cut emissions in half, if we don't reverse nature laws, I think, well, at least the UN thinks that the future is going to be quite bleak. And I can tell you at least on the 1.5-degree limit that we're doing. So the warming right now is 1.1 degrees since pre-industrial levels. And the best that we could shoot for is 1.5 degrees. That means, for me, that's not a safe harbor. It's the least worst option that scientifically we can still shoot for. That means it's gonna get worse from where we stand right now before it gets better. And the question is that if it gets better, or it will just progressively go worse and worse on emissions, it means worse and from bad to worse in terms of adaptation and resilience. And at some point, insurance may be unaffordable if climate risk remains unmitigated, right? Yeah.
Sorry. Of course, this is a very timely initiative and the sustainable insurance in SDGs. What I was wondering that if we have more multi-stakeholder approach, facilitation or workshop involving all the multi-stakeholder, including like sustainable finance and sustainable insurance. When we're talking only insurance and having only insurers in one room instead of like other stakeholders, sometimes people don't understand. That's what we face, the challenges in our country and other areas where people don't talk about insurance that much. So when you're talking about sustainable insurance, it has to be linked with sustainable finance and other entities, retailers and other who are involved in the whole value chain. Thank you.
You want to introduce yourself?
Sorry, my name is Farzana Chaudhry. I'm a chartered insurer, managing director and CEO of Green Delta Insurance. That's the largest non-life insurance company in Bangladesh. Also proud to be an SDG pioneer in 2016, announced by UN Secretary Ban Ki-moon. So, thank you.
And she will be a speaker in the next panel, next session on climate smart insurance solutions. But to your point on totally agree. So if you're talking about other parts of the financial sector, this is what UNEPFI regional roundtables are for. It brings banks, insurers together. So the plenary sessions have an insurance view, have a lending view, have an investment view generally, but it can go beyond that. Even in PSI events we've done, we have progressively widened the scope beyond the supply side of insurance companies providing capacity. So for example, when we had a 10th year anniversary of the PSI in Switzerland last year, who was there beyond insurance companies? We had chief underwriting officers, chief risk officers, and then we had CEOs from the real economy. CEO from a cement company, an agricultural company, and a digital technology company. So because we wanted to have that interaction between insurers and the real economy, particularly on the net zero agenda. And so your point about multi-stakeholder and other parts of finance coming together is also a valid point, because obviously insurance is one lever, but if you have the banks and investors there, it also makes the influence of the financial sector stronger. Any other comment or thought from anyone in the room? Was that okay? Final call. Any other final thought from Korea? Since you are outnumbering us mostly here, anyone from Korea who wants to share a thought? Yeah. Should we call Ban Ki-moon to? How about Dai Wung, since he is our Korea coordinator? Yes. What's your question?
It's amazing to have our PSI Korean signatories here in this room. We haven't worked properly based on PSI requirement and vision, and today I'm quite happy to Butch made presentation about non-life, the life and health insurance product, and probably our signatories have much more interest in our new work stream in life insurance. Could you explain more about that?
Yes, so very good, Daewung, and I'm so happy that you asked that question, because the last session on the insurance track today is about life and health. And just to debunk misconceptions there for the PSI, the principles were designed for all lines of business, be it PNC or life and health. Number two, it was also designed for any type of insurance company, whether you're a mutual or cooperative insurer, a stock company, or a broker, whatever your business model is, you should be able to apply the PSI. I guess the PSI started on the low-hanging fruit, the classic low-hanging fruit. When people talk about sustainability issues, the first thing that comes to mind is climate change and physical risk of climate change impacting coastal communities and assets, so it's non-life. That's the classic agenda. But really it extends beyond that, so we're gonna impact the life and health. So this is why over the past few years, the PSI community has grown from simply being a non-life community to a community of composite insurers or even pure life and health insurers. So I guess a third of the membership write life and health business. And this is why we wanted to make sure that we were serving that unserved community in the PSI through the life and health agenda. And I know in Korea, we have Shinhan Life and others who are part of the agenda, and we can engage others. There's TAL in Australia, there's HSBC in Hong Kong and China, Insurance Life. So I think it really caters to a lot of life and health insurance companies there who do want to be able to contribute to this agenda. Okay, I think that, is there any final thought now that we've heard from, okay, there's another, now we're warming up. Can you introduce yourself?
Yes, 저 환경재단의 이미경입니다. 말씀 잘 들었고요. 제가 보험을 보험을 네.
Go ahead, I will just translate.
제가 아침에 영어를 배워서 오후에는 영어가 잘 안 됩니다. 네. 예. 채널 1. 4? 네, 환경재단의 대표 이미경입니다. 말씀 잘 들었고요. 그 두 가지 질문이 있습니다. 아까 처음에 그 빨간색 색깔 변천하는 거하고 생물 다양성 변천하는 도표 비교해 갖고 보여주셨잖아요. 빨간 거는 누가 했는지 알고 있는데 밑에 노란색 이게 전멸하는 색깔은 누가 만들었는지 그 소스가 궁금하고요. 두 번째는 지금 손해보험, 생명보험 다 해당된다고 말씀하셨는데 혹시 재보험도 가능한가요? 기후 재난에 가장 피해가 큰 업종이 재보험일 것 같은데 재보험도 적용이 가능한 건지요?
Um,
IPBES is like the
Yeah.
IPCC for biodiversity.
yeah, so it's the Intergovernmental Panel on Biodiversity and Ecosystem Services. And what they see is that there is 5 main reasons for biodiversity loss. One of them being climate change itself. So what also Christina in the plenary session said is that biodiversity and climate change are in that way very much linked. One of the other reasons, or one of the other main reasons, is land or sea use change, over exploitation, you have chemical and pollution, and then lastly you have invasive species, which if you look at financial sectors sometimes has an impact, for example, on shipping industry. So I think that's the background. And then with the second part of your question, I'll happily give it back to Butch.
So to answer the second question on, I think you were saying that insurers are more affected than reinsurers. Yeah. For me, the answer is simple. Reinsurance would not exist without insurance, but they're both part of the value chain. So whether you're a reinsurer and insurer, these things will affect you. It's simply on where you are in the value chain. And I would argue that in certain markets, reinsurers have a role to play, more direct role to play, and some markets there are insurers. But for example, what is the role of reinsurers in this agenda? If you are an insurance company and you're buying reinsurance cover, you don't want your insurance policies to have a wider coverage than your reinsurance cover, right? So you want to make sure that you're covered for the policies that you write. So that's an influence of what reinsurers can do. For example, if they start excluding certain things, you don't want to be providing cover for those things and you don't have reinsurance coverage. So there could be an influence from reinsurers down the chain, and there could also be influence from what insurers underwrite and pass it on to the reinsurance community. So I would argue that they're both affected and they both have a role to play in this agenda. Any other easy question? Good. Shall we close this session and move to our next session?